Welcome you all to the Saturday weekly knowledge sharing session by Mehta and Mehta. Today we have a session on insight on into charges. Will be presented by one of the partners at Bangalore, Ms. Jasleen Bindra, and she'll be taking it ahead for charges and related aspects. We have panelists, Mr. Bala sir, who will be joining in a bit, Sudhakar sir, and today's panelist is Dr. C.V. Madhusudan, partner KSR and company secretaries LLP. Dr. C.V. Madhusudanan, partner, is a fellow member of the Institute of Company Secretaries of India. He holds a bachelor's degree in science and law, postgraduate diploma in intellectual property law awarded by National Law School of India University, Bangalore, and PhD in corporate secretaryship, researching on trademarks law in India and US domains. He has also completed certificate program on corporate governance from the School of Corporate Governance and Public Policy at Indian Institute of Corporate Affairs, New Delhi. He is a specialist in business structuring and transaction advisory services, ranging from structuring of foreign inbound investment, domestic outbound investment, foreign collaborations, joint ventures, corporate restructuring involving mergers and amalgamations, demergers and spin-offs, private equity structuring, and all other strategic corporate transactions. We welcome you, sir, for today's session. Before starting the session, I would request Sudhakar, sir, to say a few words about the topic, and then Jasleen and Madhusudan, sir, can take it up.
Good morning, everyone. In fact, Ashwani has introduced Dr. Madhusudan, but he is one of the eminent professionals, especially in southern region. I'm sure that most of the people who are attending from southern region, they know him very well. And he's one of the finest professionals whom I come across, having in-depth knowledge of the subjects. And especially we are fortunate enough to have him here today because as far as charges is concerned, only I take two names. One is Dr. Ravichandran and second one is Dr. Madhusudan. So today Madhu is here, and in fact he was teaching in the banking staff college for about 6-7 years on this particular subject only. So you know that what sort of knowledge he must be having it. I'm sure that all the participants will get benefited because of this. So before I say a few words, I request Dr. Madhu to say the few words. And for every time to call him as Dr. Madhu, it is difficult for me. Sometimes I may call him as Madhu also because
not at all, not
I
at all.
have that kind of a love and affection towards him. And please don't mind Madhu for that.
Not
welcome, Professor Bala. Yeah,
Good
Madhu,
morning.
you can take care. Madhu, you can start.
Yeah.
Say a few words first, and then after that, when the presentation is there, we will definitely discuss in detail about it. So,
yeah. Thank you, Sudhakarji and Ashwini for introducing me profusely. Hopefully, I stand by what has been introduced. Good morning, Bala sir.
Good morning.
So this topic on charges used to hog some limelight the yesteryears under the old Companies Act. It used to be one of the major areas of practice then, even before the emergence of secretarial compliance certificate, secretarial audit, and things like that. So this is one area, in fact, I would say under the Companies Act, where though the registration responsibility is vested on the company, but the benefit goes to the lender. It is the lender who has to really ensure that the company register the charges so as to protect its own interest. You will not find any other provision under the Companies Act where though the obligation is cast on the company, but the benefit accruing to a third party. So this is one area where a bit of knowledge of, I would say, Transfer of Property Act, a bit of knowledge of contract law is required. And most of the time what happens is that what we think is that registration is one which ensures that the charges hold good even when the company goes into liquidation or winding up. And as long as the companies are going concern, whether you register or you don't register, it makes no difference. Because the entire process, it is something like a will written by somebody and which comes into effect only after the person who has written the will passes away. So the will takes its effect only after the demise of the testator. Similar is the situation here. So the effect of a charge or the implication of registration or otherwise of a charge can be known only if the company company goes into liquidation or is into winding up, or somebody has been appointed as a receiver under either the contract or under law. So this is the situation. So I hope we will have a very interesting session. Though I would say that this particular topic has not been discussed very widely these days, but this is a very important topic from the purview of the company, because today you know that unlike the pre-2016 era, where you had a very long winding process when it comes to enforcement of security and winding up liquidation. Post IBC 2016, the analysis and the acceptance of claims by the resolution professional or the liquidator has really gained importance. And that being the situation, we will also discuss as to what will be the role of the liquidator or the receiver, and to what extent he can rely on the registration of charges when it is when he is supposed to process a claim. So I thought with these few words we can get into the session. Back to Sudhakarji.
Yeah. Thank you, Dr. Madhu. In fact, as you rightly said, the importance of the charges under the 1956 Act was phenomenal, especially when I entered the profession in the year 1985. In those days, the ability of the company secretary used to be monitored with the 3-4 sections, the 3-4 topics which are very, very important. One is the managerial remuneration. How you will get the managerial remuneration approved by the central government used to be a big task in those days. The second one is registration of charges. Filing of the charge is one thing, but ROC has to register it in the register of charges, and he has to issue a registration certificate. That is also equally used to be important. So the ability of the company secretary is to convince the registrar that this charge is a genuine one, and there are no flaws as far as the registration is concerned. That itself is also depend upon the ability of the company secretary. Third used to be the share transfer work, and the fourth used to be the fixed deposits. In fact, in those days, we used to boast ourselves that I handled a fixed deposit scheme. I got my managerial remuneration approved. I got the charges registered. As you rightly said, there used to be some company secretary firms who were having the majority of the work is the registration of charges, because it used to be a specialized field. As film actors, and yesterday we were discussing some film actors and celebrities, they used to lost the sheen over a period of time. The same as the case has happened with these four things also. Nowadays, the present generation of the company secretaries might be thinking that what these people are talking, and okay, how that charge registration is a big task. How can it be? But having said that, the in fact, in several companies, even today also, if you see that whether the charge register what the company is maintained and the charges what we are filing, whether they are impeccable, I have my own doubts about it.
Right. Yeah.
Several times it also happens that the loans are repaid, the charges are satisfied. We have filed the charge registration forms also. And most of the company secretaries think that that is the end of it. But if you see that in case of the registered mortgages, whether the mortgage got reversed in the sub-registrar's records, most of the times it doesn't happen. Similarly, if you deposit the title deeds with the banker or financial institutions, after satisfying the charge, have you collected the title deeds back? It is also a big question mark is there. Because whether it is in Reliance or in my previous company, Berger Paints, both the places we have taken up as a project that linking the register of charges with the register of charges maintained by the ROC, and thereafter what are the charges we have satisfied from our end, but ROC has not taken it on his records. There used to be a reconciliation issues. Apart from that thing, the collection of the original title dates and putting it in the proper order, that itself is also used to be a big task in those days. Even now also, as far as the collection of title dates, again, the reversal of the mortgage, what we have registered, how many companies and how many company secretaries are maintaining it without any kind of flaws. I have my own apprehensions about that. Having said that, even the significance and the importance of register of charges has increased even now, because in the good olden days, ROC used to have the power. Otherwise, CLB used to have the power to waive the, in case of any kind of non-compliance or register within the timelines. Now that they have lost the power beyond 120 days, I don't think anybody has any power to regularize the charge what has been filed. So we will discuss all these nuances. I will give a pause here. Okay, Jasmine, you can start your presentation. Thank you. And
Thank you so much.
just to tell the participants, Jasmine is one of the finest partners we have, and she is taking care of our Bangalore office. And I'm sure that you will enjoy the presentation. In fact, today there is a PCS conference at Ayodhya. I was having my own apprehensions that how many people will attend the program. As of now, we have 164 participants. This also shows 165 now. This also shows the importance of this topic even under the Companies Act 2013 also. Yes, Jasmine, please go ahead.
Thank you so much, sir. A very good morning to the panelists and the participants. It gives me immense pleasure to present on this really important topic. And on behalf of the firm and myself, I would like to wish all the practicing company secretaries a very happy PCS day today.
Yeah, happy PCS day.
Same from all of us there.
Yes. So today, the topic for discussion, like was deliberated upon in the beginning, is insights into charges, including the accounting and the taxation aspects. As regards the Companies Act 2013, Chapter 6 talks about the registration of the charges and the provisions thereto, which covers Section 77 to Section 87 of the Companies Act, and it is to be read with the Companies Registration of Charges Rules 2014. So these are the applicable provisions. First of all, coming to the definition of charge, as Section 2, subsection 16 of the Companies Act 2013 defines charge as an interest or lien created on the property or assets of either the company or any of its undertaking or both, which are taken as a security. Further, in this definition, they have gone ahead to specifically include a mortgage in the definition of charge. Highlighting a case law from the UK law, that is Dublin City Distillery Company versus Degree. In this case law, this is though UK based law, the case law, it says that in this case it was held that a charge would also include a lien and an equitable charge. What is the need, or when does the need for registering the company's assets charge is required?
Just
Yes,
a minute.
yes,
So
sir.
before we go into the next leg of the presentation on registration, we need to understand that charge can be either created by act of parties, that is through a contract, or through operation of law. So as long as the charge is created by act of parties, that is a charge is generally created to secure a liability or a debt. We need to understand that under the old Companies Act, 1956 Act, we had a section called Section 124. This section is just a one-line section. The entire Act, this is the only section which has only one line apart from the heading. In fact, the description under the section is shorter than the heading of the section. So it simply said, charge includes a mortgage. So it's an inclusive definition. It just stopped at that. And in fact, if you see Section 125 of the old Act, I'm trying to compare the old Act and the new Act just to give you a glimpse of what has undergone change. Under the old Act, under Section 125, it said what kind of charges can be created. So it went on describing about mortgage, charge, which is in the form of a hypothecation and all that. It excluded two different charges. One is a pledge. A pledge is not required to be registered under the old Companies Act. The second is in case of a lien. So a lien and a pledge was not required to be registered. In the sense, even if you don't register it under the old Companies Act, you never had any impact of the charge going void against the liquidator. But under the present Act, you see, you have a specific definition of what charges. So Section 2, subsection 16 clearly provides that charge is nothing but an interest or a lien created on the properties or assets of the company. So by definition, the creation of lien is being brought within the meaning of charge, number one. Number two, we don't have any exclusion with regard to pledge. So that means both lien as well as pledge can be registered or is required to be registered under the present Companies Act, unlike the old Act. So whenever by act of parties, if a charge is created, see, always we need to understand a charge can be created for a future liability also. The intention under the law to register is from the act of creation of charge. The law doesn't ask you what is the charge secure. So the moment you create a charge, which will secure an amount of money which may be borrowed in the past or borrowed in the present or to be borrowed in the future. So the requirement to register or the trigger to register or trigger to comply with the provisions of Chapter 6 arises upon creation of a charge. And we should always understand it is the company or the borrower who has to create charge. It is not that the lender can create charge. Lender can only impose the requirement of creation of a charge, but it is the borrower because the assets belong to the borrower. And it is only upon the borrower there is a requirement to create charge. And unless the borrower creates charge, the charge doesn't get created. So these simple aspects need to be understood before we go into the aspects of actual process relating to registration. Yeah, back to this.
Thank you for your input, sir. Yes. So, like sir said, that when does the necessity or the need for creating the charge on the asset arise? So, whether there's a company small or large, depending on the capital, they can either raise share capital or borrowed capital for financing the projects. In case they decide to raise borrowed capital, which can include debentures, which may be secured, unsecured, or any financial assistance from a bank or financial institutions. Generally, the banks and the financial institutions lend money by keeping collateral in the form of assets, properties of the company. And whenever there is such kind of a collateral taken, there is a charge created on the assets of the company. It can be pursuant to execution of loan agreement, hypothecation agreements, mortgage deeds, or anything, any other document of such nature. The main categories or the types of charges are two basic categories. First being the fixed charge and the second being the floating charge. So when we come to understand what is a fixed charge is a charge which relates to a specific asset of the company, wherein the asset is particularly decided and defined. The company cannot dispose of that particular asset or property without the consent of the charge holder. Vis-a-vis, when we come to floating charge covers the floating and circulating nature of properties, which are generally in the form of sundry debtors, stock in trade, etc. So the particular stock is not identified, but it's a general, it encompasses a general category type, such as debtors or stock in trade. So the nature of property in floating charge can change from time to time. And until the floating charge becomes a fixed charge, get converted into that, the company is free to deal with the property subject to charge, subject to certain limits that will be imposed by the borrower. The process of conversion of a floating charge to a fixed charge is known as the crystallization of the floating charge. And there are certain circumstances under which the crystallization of floating charge takes place. Some of these circumstances or events are when the debtor is unable to pay off the debts, or when the company goes into liquidation, or when the company ceases to carry on any of its business activity, or the last condition being if the contract that has been entered into between the company and the lender, if there is, it requires crystallization of charge upon happening of a particular event, then on the occurrence of such event, the crystallization will take place. We also have a case law that supports what would be the treatment of floating charge once it gets crystallized, which is Mathuri U. Rao versus Pendiala. In this case, it was held that when the floating charge gets crystallized and becomes a fixed charge, then for all purposes, the restrictions of a fixed charge will become applicable to the same.
Mean to say here is that till the time the floating charge gets crystallized into a fixed charge, it is as if there is no charge like that. Okay, the borrower can utilize the assets the way he wants. That's why most of the times it is the current assets on which the floating charge used to be there, not on the fixed assets. Okay. So once the charge gets crystallized, at that point of time, the legal restrictions, the borrower will be having, sorry, the lender will be having an upper hand over the borrower as far as utilization of those assets are concerned. Yeah.
In fact, Sudhakarji, if you recall, in fact, in the old times, probably some 20 years ago, there used to be a loan called key loan, given by banks, especially to textile mills. It is called a lock and key facility. So what happens is that the banker gives a cash credit loan against the stock of, say, cotton or something, for which he will have it in the godown of the company locked, and the key will be lying with the banker. So this is a key loan, it is called. So as and when the company wants to use it, it has to go back to the banker, and they should request, they should substantiate as to the need why they have to use it. Then the banker opens the godown, and the goods are taken out. So this was old times. In fact, nowadays you don't have it. So we have simple hypothecation where the charge is ambulatory in nature. It hovers over the assets, and there is no there is no prohibition on the part of the borrower to utilize the assets, as long as it complies with the requirements of the terms and conditions of the loan, and it doesn't default. Because the moment it defaults and the loan is recalled, then the charge becomes a fixed charge. Yeah.
There used to be major two terms. Okay, one is that there used to be a big the assets are hypothecated to so and so
notice
bank.
board.
That that is to be clearly visible at the godown itself. 2-3 prominent places you have to put that so and so bank. We have hypothecated the stocks and this thing. At the same point of time, you have to file this monthly statements of the stock statements. You have to file it, and once in a quarter or okay, once in 2 months, depending upon the terms and conditions, the bankers used to come for physical inspection also.
Yeah.
In fact, several times what the banks used to do was they used to outsource this job to the chartered accountant firms because they were not having that kind of bandwidth to go for physical verification. So, in fact, okay, as a CA article student, I used to have that opportunity to go for the physical verification of the stocks. That time, the clients used to treat us like we were the prince and princesses in those days, because we are coming from the banker side. So we used to be pampered a lot, कि भाई sir cold drink चाहिए, lunch में क्या खाएंगे आप, dinner में क्या खाएंगे आप, all these kind of things, So these are all the old memories which are coming back to me, and a kind of a nostalgia.
So the
Yes,
moment
that's
that kind of requests come, then you should understand that there's a shortfall in whatever is security.
So by the time, in fact, I came to my third year of articleship, then we realized that it is more responsibility than of an enjoyment, But as far as the preliminary, this thing in the first few months, we used to really enjoy that. Yes, just go ahead.
Yes. So whenever we talk about charges, what are the particulars that will become important to be maintained and to be kept in mind? First is the date and the description of the instrument creating such charge, the total amount secured, and the value of the property being charged, subject to charge, date of resolution creating the charge, The description of the property should be clearly defined whenever a charge is created. A copy of the deed or instrument shall be maintained, and a list of terms and conditions of the loan. Additionally, the name and address of the charge holder, which can be a bank or financial institution, shall also be clearly defined. Coming to the provisions now under the Companies Act under Chapter 6.
Just a moment.
Yes,
See,
yes,
the
sir.
particulars of charges that is required to be filled in, say in Form CHG1, is very important in the sense that, as I was mentioning earlier, the need or the importance of the creation of charge gets realized when the company goes into liquidation or winding up. And only when the charge is registered, then it is valid before the liquidator. So the liquidator, when he starts accepting the claims from the from the creditors, he has to verify as regards secured creditors whether the charge is registered. Number one. Number two, in the form that is the CHG1, what is filed and registered, we need to check the particulars of what has been registered. So there are two things. One is the banker would have created a document to create a charge to have the security done. But when you fill in the form, if you have omitted something to be mentioned, say for example, if you omitted say hypothecation of say book debts, whereas you have mentioned hypothecation of goods, you have mentioned hypothecation of machinery, you have even mentioned the mortgage aspects on the immovable property, but you have omitted say book debts. You don't have a registration of charge over book debts, though the banker might have a charge, but to have that charge classified as a registered charge, you need to mention it in the form. So what is registered is what is mentioned in the form. Just by attaching the documents don't really get registered. It is the particulars in the form which gets registered. So the documents are only an evidence or a proof to show that the charge is created, and hence you find the particulars of the charge finds a place in the form. So not the other way around. Just because I've attached a document, the document doesn't get registered. In fact, this aspect has to be thoroughly understood. And normally these days, in fact, most of the banks know they have this process of getting this CHG1 done by their legal cell. So they go through the particulars and they approve it. In fact, before the DSC of the banker is affixed. But in those days, there was no such practice, and because it was physical forms, so even the company will be more keen to get the money. So unless the registered charge, the registration is shown to the banker, he will not release the loan. So there used to be a lot of urgency in registering, and something would be mentioned in the form which the banker also may not know, may not realize, because as far as he is concerned, he must be thinking that he has the document done. So the mentioning the particulars of charge in the form is very important as regards the banker, because tomorrow when he stands in the queue before the liquidator, if he wants to be treated as a secured creditor, the particulars of the security has to be mentioned in the form. Only then the registration would have an effect on the security. So this is very important. Yes, Jasmine.
In fact, Madhu, you brought a very good finer point, and okay, that several company secretaries think that the moment you are attaching the document to the CHG1, or in the good old days, we used to have form number 8. So if you remember in the form number 8, there used to be the entire form. There are two important things. One is the description of charge. Second thing is the particulars of charge. So in those days, several company secretaries were not able to distinguish these two columns. What is the description of the charge and what is the particulars of the charge? Several times, ROC, what he used to do was they used to read the document, and whenever the charge components are not properly reflected in the good olden days form number 8, they used to what's called as keep it as it is a default document and not for registering purpose. So you have to go to the ROC, convince him that under what circumstances happened. He used to say, I will reject the form and you file it again. So there used to be a lot of issues. And even today also, if I am not wrong, the same thing is there. Whatever the main assets you are on which you are creating the charge, they have to be properly reflected in the form. Then only they will find a place in the register of charges maintained by the registrar, which is a public document also. People go for inspection and all that.
Dr. Madhusudan and Sudhakar, both of
Yeah.
you actually brought in a very, very valid point. Because I recall it, I was working with the Vodafone group of companies, they used to actually create the charges. And bankers are very much concerned about the way in which they want to drop the things agreement, and the once the agreement is drafted and other thing and all, they are happy. But when it comes to the filing of the charges, this particular group has to engage a professional to go through in filling up the form, as you rightly touched upon, unless until it is actually forming on the face of the form itself, it is mentioned, the validity of the charge is actually not there. You have brought it very well, but most of the company secretaries, we are not very much aware of this thing. As Sudhakar puts it, the moment we attach it, that itself is get charged. That has to be very, very careful. That is one. And second thing is there, you will also recall it. Earlier to 2013 Act, that means I am talking about 90s and 2000 and all those things. The charge was one of the major practice area for the specialized people. Not only that, all the bankers used to employ the practicing company secretaries to find out the search report, etc., and other things and all. That was a major report. Search report used to run in pages and pages and other thing and all. You will recall it actually. Yesterday also we touched upon on this point. So really speaking, this is the very, very important thing. Although we think the topic is very small, what is there filing a CH1 or CH9 or all things, that is not so simple as that what we think to be. But when the charge is to be realized, unless until it is properly registered, the realization of the realizing the money will be very difficult. Yeah.
Right. Thank you for your inputs. So coming to the legal, the Companies Act provision.
There is somebody has put one question. Can the first and equitable be created on the charge on marketable securities when all the present and future current assets are already charged under consortium?
Can you repeat the query, sir?
Can the first and equitable be created on the charge on marketable securities where all the present and future current assets are already charged under consortium?
Yeah, it can be done. It can be done provided the first charge holder is agreeing to that. That is called as pari passu charge.
Pari passu charge you are talking about. Yeah.
Yes, yes. I think that if I am not wrong, the question is with regard to the pari passu charge. If that the first holder is agreeing to that, you can do it. Otherwise, it will be a second charge only.
I think the query is focusing about the marketable securities. So as regards marketable securities, it has to be a pledge. So when you create a pledge, it is a specific charge. So as long as somebody has created a pledge, then there is no question of creating any further charge thereafter. Number one. Number two, see, as I said, charge is created either on the assets which are at present or in the future. So you can also create, that is why we say it as a floating charge. So the present assets, the future assets, everything gets covered. And the angle of pari passu charge comes into play only where you have multiple banking arrangement or more than one charge holder. So it is up to them to agree in between them as to the nature of sharing of the charges. So,
Madhu, if I am not wrong, in case the borrower is a share broker, so that point of time, what will happen is that marketable securities may be stock also. It may not be an asset, fixed asset or investment for them. It may be, they might be showing it as stock also. In such case, it may not be a pledge as such. They might be hypothecating the stocks, that is called the so-called marketable securities. And they can take working capital loans. In such case, yes, the second charge is possible. I mean, the pari passu charge is possible. Yeah.
Any other questions that are there, sir?
1 minute. Let me check it out. There is some question is there. What is perfection of charge?
There is no perfection of charge. In fact, perfection of charge may be a term which is loosely used to ensure that the charge is registered. See, you create a charge, then you perfect it by registering it. So the very the nature of registration is such that the charge becomes completely enforceable, and it survives the test of liquidation also. So perfection is something where you have done all that can be possibly done, or what you're supposed to do under the law, so as to you take the complete benefit of having created the security or registered the security. So perfection of charge is not a legal term. It is a banker's term, which normally they say they use it for meaning that everything else has been done, so that they have a complete control over the security.
In case of a newly incorporated private limited company, the bank asks for the fixed deposit against which they issue corporate credit card. This card is in the name of the MD and CEO and CFO or any CXOs. The bank credits a lien on the fixed deposit of the files of the CH1. So will it be arrangement be considered at a borrowing from bank?
Bala, see, Jaswin is not even started 77 for the provisions.
Okay.
Once she starts, that time this question will be answered itself. Otherwise, we will answer at that point of time.
Okay, no problem. Yeah.
Yes, starting with section 77, that is the duty to register charges. So according to section 77, subsection 1, read with rule 3 of the registration of charges rule, it shall be the duty of every company creating or modifying in charge, whether the charge is in India or outside, on its property or assets, or any of its undertaking, whether it is tangible or otherwise, situated in or outside India, to register the particulars of the charge with the signature of the company and the charge holder within 30 days of the creation or modification of the charge, as the case may be. The forms to be filed in case of creation or modification of charges: Form CHG1 for charges other than debentures, including modifications thereto, and Form CHG9 in case the charge is created pursuant to debentures, including modifications thereto. Elaborating more upon the time limit for creation of the charge, particularly with the introduction of Companies Amendment Ordinance 2019. So any charge created before the commencement of the Companies Amendment Ordinance 2019, which was effective, considered to be effective from November to 2018, in such a case, the charge shall be registered within 30 days from the date of creation. If the company fails to do so, then the company can register such a charge within 300 days of the date of the creation on the payment of an additional fees. And a last opportunity was also provided to companies to register any charge prior to November 2018 within 6 months from the date of the Companies Amendment Ordinance 2019. This was as a last opportunity before the amendments come into effect. After the introduction of the Companies Amendment Ordinance 2019, there has been a major shift in the timelines provided for registration of the charges. So any charge that is created after November 2018, the charge shall be registered within 30 days. If the company fails to do so, they are provided an additional time of 30 days, meaning 60 days from the date of creation in total, with the payment of additional fees. And if the company still fails to register it within that timeline, an additional period of 60 days, which amounts to 120 days in total from the date of creation of the charge, with the payment of an ad valorem fee. Coming to the what would be the additional fees and ad valorem fees applicable. So in case of any charge created or modified before 2nd November 2018 and allowed to be filed within a period of 300 days from the date of creation or 6 months time period that was provided as a last opportunity, whichever is later. In that case, if the period of delay is up to 30 days, then the additional fees applicable would be 2 times of the normal fee. For a time period of more than 30 days, but up to 60 days, 4 times of the normal fees. And 60, if it is beyond 60 days, but up to 90 days, then the additional fees applicable would be 6 times of the normal fee. And if the delay goes beyond 90 days but up to 180 days, then then 10 times of the normal fees would be charged as an additional fees. And for a delay more than 180 days, 12 times of the normal fees would be charged. Coming to the second scenario, which is if the charge is created or modified on or after 2nd November 2018, that is after introduction of the ordinance, the 2019 ordinance, then in that case, additional fees or ad valorem fees, as the case may be, that would be payable up to 31st July 2019 by the companies would be, if the delay is up to 30 days, then 2 times of the normal fee. More than 30 days, but up to 60 days, 4 times of the normal fees would be the additional fees. And if the delay is more than 60 days, but up to 90 days, then 6 times of the normal fees would be applicable as the additional fees. However, with effect from 1st August 2019, there has been a revision in the company's registration offices and fees rules 2014, which has revised this entire structure of delayed fees, which states that if the delay in filing is up to 30 days, then in case of small companies and one-person companies, the additional fees or the ad valorem fees would be 3 times of the normal fees. And in case of other than small companies or OPCs, it shall be 6 times of the normal fees. If the delay is more than 30 days, but up to 90 days, then for small companies, 3 times of the normal fees plus an ad valorem fees of 0.05% of the amount secured by charge, whichever is maximum of rupees 1 lakh, or whichever is higher of the two, that would be applicable. And in case of other than small companies and OPCs, it shall be 6 times of the normal fees plus an ad valorem fees of 0.05% of the amount secured, or rupees 5 lakh maximum capping. Coming to the meaning of the term ad valorem, ad valorem is a term which says that whenever the amount is imposed as a percentage or a rate of the value, like these provisions say 0.05% of the amount secured, then such a term is defined as ad valorem. That's why they have the word used is ad valorem fees applicable for the delay.
So this is the only provision under the Act where you have a fee which is liquidated and a fee which is unliquidated. So liquidated fee is one where you have a fixed fee, where it says based on the capital, so much is the fee you have to pay, 300 rupees, 600 rupees, whatnot. Then in respect of an unliquidated fee is fee which is based on the amount that is secured. So depending on the amount that is secured, the fee varies 0.05% or subject to the maximum of 1 lakh or 5 lakhs, which will be the nature of the company.
Certificate of registration. So upon filing of the form, if the form meets the requirements and is free from any kind of defects, the registrar shall issue a certificate of registration of such charge in favor of and that shall act as a conclusive proof of the charge being created. This shall be issued in form CHG2 in case of registration of the charge, and in case the form is filed for modification, the registrar will issue a certificate in form CHG3 for registration of modification of the charge. Effect of non-registration, as Madhusudan, the company shall not be taken into account by the liquidator or any other creditor until it is duly registered and the certificate of registration of such charge is given by the registrar. So hence this provision becomes really important, especially for the bankers and the financial institution.
So the emphasis here is that the emphasis here is with regard to charges created by act of parties the registration is compulsory to have the charge effective once the company goes into liquidation. In respect of charges which are created by operation of law, the entire chapter 6 would not apply. There's no requirement of filing CHG1 or something, because by operation of law, especially if you take tax laws, the local corporation or municipality laws and all that, where non-payment of any dues to the government would bring about a charge on the assets or the properties, there the act itself fixes the charge over the asset, and there is no application of this law, even if the asset is to be owned by a company. So this is the difference. So this is the most important outcome of registration of charge. Of course, as I said, this is only provision under the Companies Act where the filing of a form, an e-form, in terms of the law, actually benefits a third party rather than the company. As far as the company is concerned, it complies the law, because if there is a non-compliance, there is a penal provision applicable. But the real use or real benefit of having filed a charge is really to the lender or the person who has the security.
Will the non-registration of the charge affect the repayment of the money? So the answer to this is no. Even if the charge is not registered, merely the creation of the charge would be questionable. However, the obligation to repay the money, if the company is going on as a going concern, will always remain.
Yeah. So what we need to understand here is that the non-registration of a charge is only void against the liquidator, not against any other person. So the lender can as well go to a court of law and enforce the security. So only in the situation of the company going into liquidation or winding up, then the charge becomes void. Otherwise, if the company hasn't gone for liquidation, but if the banker wants to enforce the security, even though the charge is not filed or registered, still he can do so, right? So the situation of the charge getting void is only upon liquidation or winding up, not in any other case.
Right. Yes. Thank you for that input, sir. Section 78, application for registration of charge. Read with rule 3 and 6, this section says that when a company fails to register a charge within the stipulated time, the person in whose favor the charge is created, meaning the charge holder, may also apply to the registrar for the registration of such a charge by filing e-form CHG1 or CHG9, as the case may be. This is the onus of the charge holder to secure their charge over the property. The registrar may, within a period of 14 days after giving notice to the company, unless the company states that the charge has already been registered or shows sufficient cause that why the charge should not be registered, can allow the registration of the said charge. The proviso to section 78 states that where the registration is affected by the charge holder itself, the person shall be entitled to recover from the company the amount of any fees or additional fees or ad valorem fees that is paid by the charge holder to the registrar for the purpose of such registration.
Just a moment. In fact, another important aspect which I thought I would, I would make it because it's very, very important. If you see under section 77, I think under subsection 1, I think proviso 3, the proviso clearly states that any right obtained prior to registration of the charge will succeed. That means if I don't file within time and there is a delay in registration of the charge, in the interregnum, if some other lender or some other person was lent money gets a charge over the same properties, because the properties are being, the charge being a floating charge. So only in case of a specific fixed charge, then I need to have the permission of the lender in whose favor the charge is created. If it is a floating charge, I may be creating charges to various lenders. So if say banker A, from whom I have borrowed money, and I've delayed the registration of charge in terms of the money is borrowed from banker A. Let us say banker B has lent me money after the banker A has executed the documents, but I registered the banker B's charge prior to the registration of charge of banker A, then the banker B's registration would rank in priority, even though the date of creation of charge is after the creation in effective to banker A. I think I made it clear. So any right obtained by any other party over the properties which are subject to charge, if the charge registration gets delayed and if such people get some right over the property, then that right survives, and it is upon, I mean, it is the, I would say, the ill luck of the, the actual lender, the prior lender whose registration gets delayed, and hence his ranking of securities also gets delayed. See, the beauty of the charge dating back to the date of creation is that from the date of creation, the registration gets validated. But however, I mean, the charge gets validated, the registration gets validated. But however, the date of registration is important because when the liquidator ranks the creditors at the time of no assessment of claims, the ranking happens based on the date of registration, not on the date of creation. So it is where the date of registration becomes very important, because unless the charge is registered, it doesn't get into the ranking at all by the liquidator. The liquidator would not even consider it or recognize the charge for the purpose of ranking of creditors. Liquidator, even in case of a charge which is not registered, the claims will be accepted by the liquidator, but he will not put the claim in the secured creditors list. He has to mark it against the unsecured creditors list. That is the difference. But even amongst the secured creditors, it is the date of registration which decides where the creditor ranks in the list of creditors.
So that means whosoever register at the first, he will get the top priority.
Exactly.
And whosoever comes subsequently, he will be actually second, third, like that only to know although charge is created earlier. That is the point you are saying.
Exactly. So the 30 days time limit itself is huge these days, because in case of a big enterprise, when you borrow from multiple lenders, the registration, that is why these days bankers don't lend, or they don't really disburse the loan unless you produce the certificate of registration.
In fact, I would like to further add one more point. The purpose of registration of charge is why it is so important, because once the charge is registered, then only the public will come to know about the charge, what has been created on that. It is called a doctrine of constructive notice. So unless until the charge is registered, the constructive notice is not there to the public as such. So you might have created a charge. So it is only between you and the lender, it is there. But the information is not there outside. In the meantime, if the borrower is a nasty fellow, that he may go and create another charge. And if he creates that charge, if he go and get it registered first, the first charge holder, even if he has created it, he will not get any right. First right, he will not get it. As far as the OL is concerned, I mean, God forbids if anything happens and all. As Madhu has rightly mentioned, whoever is the first registered charge holder, he will get the right, not who has created the charge first. Yeah.
Thank you so much for bringing such an important point to highlight. So the procedure to be followed by the charge holder in case they want to register the charge themselves is the charge holder has to make an application to the registrar in CHG 1 or CHG 9. If the company fails to do so, the registrar will issue a notice to the company. If the registrar issues an objection from the company stating that the company has already gone ahead with the registration, or the company has sufficient cause to show that the charge should not be registered, then the registrar will not register such a charge. But if there is no objection received within 14 days from the date of issue of notice, then the charge shall be registered. Section 79 states that Section 77 relating to registration shall also be applicable for modification of the charges. Coming to Section 80, that is the date of notice of charge. It states that where any charge on the property or the assets of the company or any of its undertaking is registered under Section 77, any person acquiring such property, assets, or undertaking on behalf or any part thereto shall be deemed to have notice of the charge from the date of the registration. This is what Sir said, the doctrine of constructive notice, which has been put into law as well under Section 80. Section 81 talks about the register of charge to be maintained by the registrar of companies. In accordance with Section 81 and Rule 7, the registrar of companies shall maintain a register of charge containing the particulars of the charge registered in respect of every company on the MCA portal, and the register shall be open to inspection. This is in the form of the MCA portal stating the register of charges itself. Section 82, coming to the aspect of satisfaction of the charge. So the term satisfaction of charge means when the tenure of financial assistance has expired, or where the instrument of charge has been revoked by both the parties before the expiry of the tenure with mutual consent. So it can be either subject to repayment or any other condition as agreed to. In that case, the satisfaction or release of the charge shall be reported to the registrar of companies. Section 82, read with Rule 8, states that the company shall give intimation to the registrar of companies of satisfaction of the charge in full within a period of 30 days from the date of such payment or satisfaction in the form CHG 4 along with the applicable fees. Where the satisfaction is not, the CHG 4 form is not filed within 30 days from the date of satisfaction, the registrar can be informed within 300 days from the satisfaction and the CHG 4 form can be filed there too. The registrar shall give a notice to the charge holder before registering the satisfaction of charge, which shall be a minimum 14 days notice. However, if the intimation to the registrar is already signed by the charge holder, which is the general practice, then in that case, no such requirement of issuing a notice by the registrar of companies is required. Once CHG 4 is filed and if it is free from defects, the registrar of companies shall issue a certificate of satisfaction in form number CHG 5.
The two things to be understood here. One is the satisfaction, which means that the loan is repaid or the liability is nullified, and thereby there is a release of charge. Right now, by not filing the satisfaction of charge with the register of companies doesn't mean that the charge still continues. See, the charge gets released the moment you make the payment. In the sense, you settle the liability, the charge gets released. It is nothing but a nullifying effect which will have when you file it, because you have created an entry with regard to creation of charge. Now you have to cancel it by filing to say that the charge is satisfied, again only for public notice. So just because the charge is the satisfaction of charge is not filed or not registered doesn't give any right to the lender to proceed on the company. The moment the loan is repaid, the charge gets cancelled automatically. The registration is only for public notice, so that not only you comply with the law, because the law requires you to file the satisfaction of charge, but also inform the public that the charge that was created on so and so date has been nullified or cancelled.
But just to add further to that, unless until you create the satisfaction of the charge, in the ROC records, that it will show that as if there is a charge still continuing. Because of that, what will happen is no other lender will lend you the money because on this particular asset, because still there is a charge continuing in the ROC records. That is the reason why you have to do is you have to file the satisfaction of the charge and get that particular entry nullified in the ROC records, number one. Number two, though it is said that within 30 days of such repayment of the loan, you have to file the charge. But unless until the lender give you a no objection certificate, you will not be able to file that satisfaction of the charge because ROC will not accept it. Several times it happened that by the time the lender issue the no objection certificate, they will take the time because they have to ensure that there are no dues left out as far as the borrower is concerned. So if I am not wrong, according to me, it is the 30 days will start counting from the date I receive the no objection certificate. Within 30 days of that, I have to file because by merely loan repayment is not the end of it. Suppose, say, for example, I say from my side, I have repaid everything. But the banker has to certify that he has recovered all the dues from the borrower. That is considered as the payment of the loan, repayment of the loan. From there, 30 days is to be there. So the banker has to certify by way of issuing a no objection certificate for filing the satisfaction of the charge. That is how the 30 days is to be worked out. Although if I am not wrong, please correct me.
You are absolutely right, Sudhagar, because if you also recall, because you are also old timer, even Madhu also equally, because he has been in the practice for the last 20 years. In fact, in those days, we used to get the money borrowed from the various banks or financial institutions, and there used to be a concept called the nomination director. So nominee director, they used to be there. So he used to be present in the meetings, etc. And once the loan is repaid, normally they withdraw the nomination director in the particular meeting. He says that I am putting up my paper, I am resigning from this. We get it recorded. But the problem is, unless until we get an official no objection certificate, as you rightly said, we cannot file the satisfaction of the charges, which definitely takes a longer period. That is one. And similarly, he has also resigned, even for filing the DR toll form today. Those days it is form 32. That was also difficulty because unless we get a proper letter from the banks who have nominated him, because he is nominated, he is withdrawing it. Because he himself is not there. He is one of the employees of the company, so he is nominated. Unless we have to get the official letter from them, then this form filing was also difficult. As you rightly say, it is that 30 days start running from only after getting the no objection certificate. That is definitely the case. And this to take a longer time actually. Madhu can share his experiences on this.
Yeah, see, the concept of obtaining a no objection certificate is something which is by practice, not because of prescription of law. See, that is one way of saying that or ensuring that no, I can say with confidence that the charge has been satisfied or the liabilities have been repaid. See, the provision section 82 itself provides for a process whereby if the company notifies the ROC that the charge has been satisfied, and if there is no evidence to show apart from just the statement of the company, the registrar has a right to issue a notice to the charge holder. Wait for 14 days, and if there is no reply, then he can proceed to register the satisfaction. So the law has foreseen this requirement because there is, unlike for creation of charge where you have to execute a document, it is by execution, by contract, you create charge. Whereas in case of a satisfaction, there is no such requirement of executing any document or any letter or any there is no requirement of any real agreement between parties to prove that no, the charge has been satisfied. So the law has foreseen this requirement. That is why there is a process of a notice to be issued by the ROC is prescribed. But this process, in my opinion, as I have never come across being utilized or used by ROC. I don't think even ROC realizes there is a process of this nature, because the moment you don't have the no objection certificate as no attachment to your form, the form is not going to be registered. As simple as that. Forget about the ROC issuing a notice. So the law is beautiful in the sense the law has foreseen the situation, but the practice is otherwise. So, as I said, this no objection certificate is nothing but a conclusive proof, I would say, to say that no, the liabilities have been repaid and the banker, the company owes nothing to the banker. But it is not the requirement under law.
But correct me if I'm wrong, doctor. Is it not that a form is required to be signed both the parties actually?
Although you are on mute.
See,
Yeah.
Yeah. So what happens is these provisions are not new to the 2013 Act. This has been copied from 1956 Act. Under the 1956 Act, we had the physical filing, and then until this e-filing kicked in. So there you had this concept of physically filing the where even if the company has only signed the form without the banker's signature, physically filed, then ROC seeing it and taking up the process. That is possible. In today's context, it is not possible at all. So this process, which is there under the section, cannot be enforced because you will not be in a position to file. In fact, if you have, I think, Jasmine, there is yet another provision where the ROC has been given a power, so much of power to clean up the register of charges. So probably when you go to that, we can learn about it. As of now, the process of filing itself would not get completed if the banker has not signed. As I said, this provision was actually lifted from the earlier act. So it is actually a misfit in today's context of e-filing.
No, why I write this point is in 2013 Act, some other I do not have the practical experience. Because I only know the law in 2013 Act because by the time 2013 Act and other thing and all, I actually retired. But in 1956, I categorically remembered unless until both the parties signed, the form cannot be registered. That is definitely, that was the case. That is why I raised this question actually. So that means today what you are saying is, even if the other party, that is letter is not signing it, we can still file the form?
No. In fact, you can't file it now. In fact, I'm seeing the other way around. Under the old act, even though the requirement is that both the lender and the borrower has to sign the form. But with a single signature, with the borrower signature, at least you can manage to file the form saying that the charge is satisfied because it was a physical file, not an e-filing.
Okay.
And you can also educate the ROC saying that there is a provision in the law like this where you can issue a notice. But today there are no such the avenues at all. Unless you file the form, the ROC would not get a notice that the satisfaction is filed. So for filing, you require both the bankers as well as the borrower's signature. So it is not possible. So this process is only in the letter, not in the spirit in today's context.
I see.
Right. Moving on to section 83, the power of the registrar themselves to make entries of satisfaction or release. This is the provision that sir was referring to. So if the registrar is satisfied that the debt has been paid and the asset is released from charge, the registrar may suo motu register the satisfaction of the charge and inform the parties within 30 days of making the entry in the register of charges maintained by it under section 81. Section 84 talks about intimation of appointment of receiver or manager. So in case if a person obtains an order pursuant to a court order, is appointed as a receiver or the manager of the assets or property of the company which is subject to charge, then within a period of 30 days from the date of such order or the date of appointment as the case may be, the person shall give a notice of his or her appointment to the company. Such a notice shall be in the form CHG 6. Additionally, in case of secession as well, secession of the person to act as receiver or manager, the same form has to be filed with the company. Section 85 talks about the register of charges to be maintained by the company itself. So Section 85 read with Rule 10 provides that every company shall keep at its registered office a register of charge in the format of Form CHG 7. Such register of charges shall contain the particulars of all the charge registered with the registrar of companies, as well as the entire particulars of the charge holder, as well as the property that is subject to the charge. A copy of the instrument creating the charge, whether it is pursuant to an agreement or any other document, shall also be kept at the registered office of the company along with the register of charges. The entries in such register shall be authenticated by a director or the secretary of the company or any other person authorized by the board in this behalf. The register of charges shall be preserved permanently at the registered office of the company, and the instrument creating the charge or modification thereto shall be preserved for a time period of 8 years from the date of satisfaction of the particular charge. Inspection of charges, the register of charges and the instrument shall be kept at the company and shall be open for inspection by any member or creditor of the company without payment of fees and by any other person on the payment of a particular fees. Section 86 is the penalty provision, the punishment for contravention in these provisions. So if any company is in default with complying with the provisions, the company shall be liable for a penalty of ₹5 lakh and every officer in default shall be liable to a penalty of ₹50,000. In case a person willfully furnishes any false or incorrect information or knowingly suppresses any material information relating to charges, such a person is liable for action under 447 relating to fraud. Rectification by central government and register of charges. The central government may, on an application filed in Form CSG 8, direct the rectification of any omission or misstatement of any particulars in any filing that was previously recorded with the registrar of companies with respect to the charges creation, modification, or with respect to any satisfaction as well. The second scenario is the central government may direct extension of time for particularly only satisfaction of charges if such filing is not made within a period of 300 days from the date of repayment or satisfaction. However, this is the point to be noted is this is only with respect to satisfaction of charges. Verification of documents.
Yeah.
Yes, sir.
Here
Yes, sir.
we need to understand that, as I was mentioning, the particulars of registration, what is mentioned in the form is what is registered. So in case if there is an omission to mention any particular security or a charge upon a security at the time of registration and the form is registered, and later it is discovered that there is an omission, and as I was mentioning, what is mentioned in the form only survives before the liquidator. So the liquidator would not be seeing the charge creating documents, that is the agreements. He will be only seeing what is mentioned in the form. So in that context, before the company goes into liquidation, the lender realizes that there is an omission to mention a particular security or whatever in the form, there is a process provided under the law to rectify that. And once you rectify that, it is as good as the form being filed without that defect from the date of registration, it takes effect. The rectification doesn't really interfere in the ranking of creditors. So the rectification is only an opportunity provided to revisit what has been registered and to rectify if there is any omission. As regards the continuation of delay in respect of filing of charges, it applies only for satisfaction and not for creation or modification. So for in respect of creation or modification, the maximum is, I think, 120 days. And once you cross that limit, the gate is closed. That means that the lender loses the opportunity to register the charge and he has to really face the problem of not being listed as a secured creditor in case if the company goes into liquidation. And I repeat, Non-registration really doesn't affect the charge as long as the company is a going concern. Please understand that. So as long as the company is a going concern, the charge is completely enforceable. There is no question. The company which has failed to register the charge cannot take it as a defense at all, as long as the company is a going concern. So the entire benefit of registration comes only upon the company going to liquidation or what. Yeah.
Right. Verification of documents. Rule 3, Sub-Rule 4 of Companies Registration of Charges Rule 2014 states that the copy of every instrument evidencing the creation or modification of charge shall be verified as follows. So where the instrument or deed relates solely to the property situated outside India, the copy of the document shall be verified by a certificate issued either under the seal of the company or by any director or company secretary of the company or any other authorized officer of the charge holder, or under the hand of some person other than the company who is interested in the mortgage or charge. Where the instrument or deed relates to whether wholly or partly to the property situated in India, the copy shall be verified by a certificate issued under the hand of the director or company secretary of the company or any other authorized officer of the charge holder. The list of forms relating particularly to charge, though we have discussed it during the course, but just to reiterate, CHG 1 is for the application to registrar for creation or modification of charge other than in case of debentures. CHG 2 is the certificate issued by the registrar in case for concluding the registration of the charge as a conclusive evidence. CHG 3 is the certificate for modification of the charge issued by registrar of companies. CHG 4 is intimation relating to satisfaction of charge. CHG 5 is the certificate issued by the registrar of companies evidencing satisfaction of the charge. CHG 6 is a notice of appointment or cessation of receiver or manager in respect of the property which is subject to charge. CHG 7 is the register of charges created, including the creation, modification, and satisfaction to be maintained by the company at its registered office. CHG 8 is the application to central government requesting either extension of or rectification of any omission or misstatement. CHG 9 relates to application for registration or modification in case of charge relating to debentures per se. And CHG 10 is application for delay to be filed with the registrar.
Dr. Madhusudan, I just want to know for my information, when you talk about the rectification of the charges, how do you actually go about it really? How do you deal with it?
Yeah, you have the prescribed process of making the application before the regional director, intimating as to the details of omission or mistake that has happened, at the time of filing of CHG1. And you would, evidence the omission through a document. I mean, suppose if there is an agreement which has provided for a particular property which has to be, secured, or on which charge has to be created, and if that particular particulars of that is not entered in the, say, the CHG1, then you would show that and you would ask for the rectification.
But
So
the rectification you'll do it what from GNL form, or you will again?
No, there is a CHG 8. No, that is what Jasmine had just mentioned. It is a form which has been prescribed for making an application.
Okay. 8 form is there. Okay. Yeah.
Yes. And after filing CAG 8, regional director will keep the hearing, and at that time we have to produce all the evidence, and then they will pass the order.
Okay.
So the central government has delegated this power to the RD, who takes up these applications.
Thanks a lot. Thank you.
Coming to section 384 of the Companies Act, subsection 4 particularly, which states that the provision of chapter 6 shall mutatis mutandis apply to the charges on property created or acquired by any foreign company as well, extending these provisions even to a foreign company.
See, one may be wondering as to how a foreign company would create a charge over an asset in India, or it could be even an asset of the foreign company wherever it is situated out of India. In fact, we recently came across a situation that I had to advise on a situation where there was a branch which was permitted to be operated in India under the Foreign Exchange Management Act, opening of a place of business in India. And this branch, for your intimation, it is treated as a foreign company under Chapter 21. So even though it is a branch of a foreign company, it is treated as a foreign company, and there is a requirement of intimating the Registrar of Companies Delhi with regard to having created this branch or formed this branch. And if this branch were to borrow, and in fact the branch would be only an extension of the foreign company, the real foreign company outside India. But under the Companies Act, this branch itself is treated as a foreign company. And in case if this branch, in fact, the case which I had to advise is that it had fixed deposits lying, and the banker wanted to create a lien on the deposit to provide a short-term facility. And we had I advised them to file the particulars of charge under CHG1. So this is one instance where the branch of a foreign company, which is not exactly a company under the Companies Act, but is deemed to be a foreign company under the Companies Act, requiring to file CHG1 for the lien marked on its fixed deposit. So this is one instance where it can happen. Or really in the case of a foreign company, if the branch has assets in India, in fact, under the Foreign Exchange Management Act, you would know that if you have to form a branch, the branch is entitled to acquire assets in India for the setting up the branch or whatever. So because the branch is entitled to do business in India. So these assets can be charged if the foreign company or the company which is outside India. So there, the only requirement is for the branch to file. Now the question is, would the branch file? Because the liability of the foreign company is not specific to the branch. The foreign company would have borrowed money for various purposes. But what charge is specific to that branch, the assets of that branch, only that can be, those particulars can be filed under the Companies Act.
Thank you, sir. Certain frequently asked questions relating to charges. If the corporation, that is the company, fails to register the charge, when the charge holder, will the charge holder get the right to file the form with the ROC? Yes. Under section 78, the charge holder also has the right to create the charge. Whether charge of companies would be maintained at any place other than the registered office of the company. As per Rule 10, Sub-Rule 1, the registers of charges shall be maintained only at the registered of the companies, and no other place would be the correct place to maintain this register. When registration of charges is mandatory other than in case of creation, the registration of charges will become mandatory when the company acquires any property that is subject to charge, or in case of any modification in the terms or conditions of the charge which are already registered. Who can authenticate the entry in the register of charges? The entry in the register can be authenticated by the director or the company secretary or any other individual who is authorized by the board for this purpose.
This means there is always a doubt as to what amounts to modification. People understand what is the creation of charge, but what amounts to modification? See, the law clearly says that it is only with regard to the terms and conditions or operation of any charge registered. That is, either the amount secured by the charge has to be enlarged, or the properties that are secured by the charge, it gets diversified or it gets enlarged. Or there may be a shrinkage also. Suppose if I have given 4 or 5 properties initially as security, and bank releases 1 or 2 charges over it, and there is a modification to this effect, because I need to notify that for these properties there is no charge operating in favor of the lender. So the extent or operation of the charge happens in 2 ways. One, on the liability side, that is to the extent to which the liability is secure. The second is with regard to the asset side, that is to the extent of the charge operating on the properties or assets of the company. So mere change of interest rate or a mere change of a margin for the loan, or some administrative changes doesn't really require a modification to be filed, unless this modification is going to affect these 2 things, as I said, the amount secured by the charge or the properties covered under the charge.
Who can inspect the register of charges? So any member or creditor can inspect the register of charges, and any other individual can also do so, but subject to payment of a fee. What if the charge is partially satisfied? Like Sir just mentioned that only out of 5 properties, only 2 are released. Then in that case, like Sir already highlighted, in such a case, CHG 4 would not be required to be filed, since CHG 4 for satisfaction is only in case of full satisfaction or complete satisfaction of the charge. In such a case of partial satisfaction, Form CHG 1 for modification of the charge would be required. Touching upon another important aspect related to charges, and one of the practices for that every company secretary would have come across is that of the search report. So what is a search report? The ROC search report, or search report as it is said, is a report that is prepared by a practicing company secretary, chartered accountant, or advocate after the inspection of the documents or records maintained with the registrar of companies about the company. It is a tool for the stakeholders or banks to understand the details of the company's record, and more particularly relating to the property of the company that is subject to charge. Who requires a search report? Usually, the banks require a search report of the company while granting loan to the companies. They require this search report with the purpose to keep themselves safe from the defaulting companies and to understand that what properties of the company are already subject to charges. This helps them to decide on the investment, control, and management. The brief contents of the search report, it includes the name of the company, the date of incorporation, the SIN of the company, capital structure, registered office address, details of the directors and defaulting directors, if any, the details of the shareholders, the details of the registered charges as per the ROC records, and the properties subject to charge as per the registrar of company records.
In fact,
Yes,
the charge report, what you are talking about, I remember the different banks and the different financial institutions, they used to have their own format in which they want to see the search report. Because the same search report which is prepared, although the contents and other things will be there, they would like to see in their format. Each bank and each institution, they used to have the different format designed for themselves, and the search report used to be given according to that format. That was the experience which was there actually that time.
right. Now, having understood the aspects related to company law, related to charges, I'd like to hand over the baton to my colleague, to highlight the taxation and the accounting aspect related to charges.
So good afternoon, everyone. We have gone through the overall explanation about the registration of charge and the process and certification, everything. So now let's understand what will be the impact on the accounting and the taxation. So the charge is mainly loans and etc. that company has taken, and again some securities of the company. So it's the accounting treatment for the charges is basically the similar to the loan transaction. There is not much difference between that. So let's understand the disclosure portion and the taxation portion to some extent. So just in next slide. So Jasmine has already explained us that there are different types of charge. That's mortgage, hypothecation, pledge, and lien. All have a same impact, but it has some impact on the financials because the underlying asset, if there is a change in value, it directly impact the loan and the lenders. So these are the different terminology used while creating the charge. Next slide. So mainly in IndAS, the accounting standard 16, IndAS 16 says that the capitalization of the cost. So when we purchase the car and when we file the charge against that or some machinery or something. So whatever the charges that is incurred to bringing that asset into the use, so that charge needs to be capitalized. So if the value of the car is say or machine is 10 lakh rupees and there is the hypothecation and the other stamp duty charges, those charges will get added to the cost and it will be recorded in the books. And IndAS 109 says that out of that, what will be the cost to be taken in the asset, what should not be taken into the consideration. And IndAS 32 emphasize the liability and equity portion of the charge, but charge is totally a liability side. So the charge will be considered as a because it's a loan. So we have to show it either it under the long-term liability or the short-term liability based on the duration. If it becomes the outstanding amount comes down to less than 12 months, then we have to show it under the current liabilities. So the accounting standard basically shows the requirement of the presentation so that the lenders can come to know that what is the debt structure of the company before giving any additional borrowings. Next slide. So IndAS has more disclosure and it's more they want more clarification that which kind of asset is you have lien mark. We have to mention the name of the asset. For example, if we have given some FD or mutual fund or liquid fund against which we have taken borrowings, then the name of the mutual fund needs to be mentioned in the books of account under the disclosure of the schedule of loan. However, IGAP is very normal. They recognize the value on a historical basis against the IndAS where they sometimes require to be valued at a fair value at the end of the year. However, the Indian GAAP normal accounting standard takes everything on a historical basis and amortize over the period of time. And expenses also here also the same concept of the capitalization of the expense which we have incurred for acquiring the asset, and that we will claim the depreciation on the expenses which is incurred to bring this asset into the existence. So on the 10 lakh asset in our example, we have spent 1 lakh rupees for create that stamp duty with the bank, which we have already which we will add to the asset and we'll get the depreciation on that expense as well. So that expense will not route through a P&L. Next slide. Yeah. So impact of the financial intangible asset. So in practical ways, sometimes generally we think that only the asset which is tangible can be given to the can be given as a hypothecation or lien mark for the purpose of borrowing. However, when we see some startups which they have the main property as a IP, they don't hold any large physical assets. So nowadays, bank also take the IP value, like they also consider fixed as tangible and intangible, both asset, and they in their agreement they write that all the assets are under the lien mark and they register it as with the ROC. Also, the accounting, even it has an impact on debt equity ratio, current ratio, because when we take the loan, it restructure the balance sheet. So when we consider the debt equity ratio, everything, it has an impact on the financials. And on the basis of debt equity ratio, further the loans are being given. If the charge is not filed on the ROC, it becomes difficult for lender to understand whether the company has taken proper borrowing or not. So that's the importance of the charges. And the pari passu, the main concept is a pari passu concept. Can we go to the next slide? Yeah. So nowadays, what happens is whenever we approach to take a loan or something, so another lender will first take the pari passu letter from other bank, because it gives a ranking in case of liquidation or when company goes into default. So they will not even disburse your any amount unless and until they get the confirmation or the pari passu letter from other lender that all they are in equal position in case of the default. So practically, when, for example, if the large companies they take the loan of say 500 crore or 1000 crore CC order of facility, so there is a consortium, like on not the single bank will provide you the same amount. So when they make a consortium agreement between the 10 banks, which all the banks grant their 100 crore rupees amount as a consortium banking, the bank amount will come from a single bank, but all other bank have a same pari passu charges over the assets of the company. So there are some fixed asset and there are some floating charges. So when the fixed charges are already identified, so we cannot sell or liquidate those fixed asset unless and until we get the permission from the lenders. And floating charges are like it will be assigned to anybody when it gets crystallized. So till that the bank will have overall floating charges on all the current assets or the assets which are not yet identified. So pari passu letter is required whenever we go for a further lending from other bank, and they will not give you a loan unless and until they get a confirmation from different lender. Next slide. So this we already discussed that there are legal formalities and all for the purpose of their security purpose. They get the pari passu letter from all the lenders, so they knows whose charge is on what asset, and in case of any default, who can claim their money first. Next. Yeah. So India 16, we discussed that all the fixed charges, whatever we have incurred, that we can capitalize. Interest on working loan will be taxed, will move through the P&L account. And Section 43B of income tax says that whenever you take a loan from any bank, and the interest will be deductible under the income tax only if it is paid before the due date of filing the return. So even if we have taken the loan from NBFC or any bank, then and the charge is filed, so the income tax department also can see if we have paid the interest on time or not, and if it is paid, then only it will be allowed as a deduction, otherwise it will be taxed. However, it will be allowed in the next year whenever we pay, but for that particular assessment year they will disallow the expenses and they will not allow us to claim it.
If a charge holder, okay, he has not filed the charge well in time, and he was to pay the penalty by way of ad valorem duty, I mean ad valorem basis, which is 0.05% of the loan value, okay, or the amount whatever he has borrowed it. So where you will show that penal charges in the, is it a charge to the profit and loss account, number one, and will it be allowed for the purpose of tax purposes as a business expenditure?
So whenever the penalty and late filing charge will be as per the Income Tax Act. Income Tax Act, they don't allow any late, any penalty on even on TDS or GST also. So these are the penalty which is not deductible under the Income Tax Act. But we will charge to a P&L account for the presentation of financials. But at the time of income tax return, it will be disallowed.
Yeah, generally the penalty and fines are actually disallowed by the tax department. They are not allowed. However, you can charge it as a business expenditure, but subject to tax.
So yeah. So Jasmine, I think this is the last slide.
Yes, thank you. Thank you so much.
Yeah.
Thank you for highlighting these aspects.
the Schedule 3 of the Companies Act, which provides for disclosure in the financial statements, there is a requirement of disclosing as regards long-term loans or short-term loans as to the nature of security that each facility is covered, secured or whatever. So the notes to the accounts has to disclose as to what is the security that is offered on each of the loan. If the loan is naked, in the sense the loan is not secure, then you are supposed to state that it is not secure. So there is a disclosure requirement even under the Schedule 3 of the Companies Act as regards the charge being created on the assets of the company. Right. So by looking at the balance sheet, one can see, apart from your tools like research reports or inspecting the register of charges at the portal of MCA, by looking at the balance sheet, you will be able to see what is the liability that is actually as a security on the assets and to what extent the charge is covered on the assets of the company. So that is one way of finding it out, apart from the public avenue of inspecting the register of charges.
I think now we can take up our questions.
Yeah.
In case of a newly incorporated private limited company, the bank asks for the fixed deposit. In case of a newly incorporated private company, the bank asks for the fixed deposit against which they issue a corporate credit card. This card is actually in the name of the MD or CEO, CFO, or any other company officers. The bank creates a lien on this fixed deposit and files CHG1. So with the arrangement of the consolidated as a is it considered as a borrowing from the bank?
See, the focus for registration of charge is not on the liability. It is the amount that is secured by the charge. Whether there is a liability outstanding or not, as long as a lien is created on the assets of the company, the Chapter 6 gets triggered. CHG1 has to be filed, irrespective of the fact whether you have availed the loan or not. If there is a loan granted and if there is a security created, charge created, you are supposed to file, irrespective of whether the loan has actually been availed. Right. So that is the focus of the provisions.
What if the charge form filed by the bank professional and later there are any error found or given wrong details? Then who will be liable in this case, or in whom penalty will be imposed? I'm not really sure bank professional file, because the law says actually it is the responsibility of the company to file the form, isn't it?
No, there is a provision where, suppose if the company fails to file, then the banker has been given, the charge holder has been given an opportunity to approach the registrar to file. See, we have also seen that wherever there is a omission or there is a mistake in the particulars of charge which is registered, you have the opportunity of going before the central government, that is the regional director, to CHG8 and seek a rectification of register of charges. That's it. So there is normally no cost is awarded by the regional director while rectifying the register of charges. So there is no question of any liability arising out of it. I have also clarified that by rectifying a mistake or an omission, as you are not affecting the ranking of creditors also, if at all if that company goes into liquidation.
I don't know. There is
only thing, Bala, 1 minute. To say that in case a banker is filing the charge and he has given wrong details, it may amounts to a defective charge. Okay, that means the charge what he has filed, to the extent the filing for the particulars are defective, he will get a defective charge only. So he will be at loss. But as such, there is no penalty for that particular thing.
See, normally what happens is that, sir, you have a sanction letter through which the loan is sanctioned. And the sanction letter would provide for various terms and conditions, like what assets need to be offered as security and what. The process is such that you will not be able to create all the security at the same time. Some creation of security would take time. For example, mortgage, it would take some time. So what sometimes you find that the bankers would insist everything to be written in the particulars of charge. We need to understand that what you enter as the particulars of charge in CHG1 is what is actually created. That means charge has to be created first. Only then there is a need to enter it as part of the particulars of charge in the CH1. So if something is written, say a particular charge on say a particular property is written, but in effect the charge is not created, right? At that date, there is no creation on that date. Then the registration would not operate on that. As I said, the liquidator would only see what is written in the form, but he would not stop with that. He has to corroborate with the documents that are filed along with the form. So the reverse would not apply. You have a document to create charge, but the particulars are not written in the form, the registration would not operate. In the same way, I have written something in the form and I don't have a document to corroborate for that, then again the registration would not operate. So there is no question of writing anything over and above what is to be written, or if there is an omission to write something which has actually been affected through a document, then you go before the regional director and rectify it. That's it.
There's one question is there, I don't know how to answer this question. Is there any way can we avoid the admin around?
No, it's not possible. See, you will not be able to file in the first place.
Beyond 120 days, is there any option to reduce the created charges by approving the central government as the provision of the consolidated condonation of the delay is actually omitted?
Yeah, no chance. The gates are closed.
After Company Act amendment, what if charges are not registered after 120 days also, whether the agreement date should be shifted to any recourse available?
No, the lender would do that because the ranking is very important. See, as I said, we need to understand that the lender doesn't just see the registration. For lender, a charge can be enforced even when the companies are going concern, for which he need not rely on the registration. He can rely on the documents that is created and he can enforce the security. Right. So, shifting the date, we have come across where sometimes the bankers agree to shift dates because if they have missed the bus to register the charge, but generally it doesn't happen.
If a charge is not registered within 120 days of its creation, modification, is there any possibility in getting it registered?
There is no possibility, we said, and if at all, if the banker, if no further interest is created in the interest in favor of any other third party, then of course the banker could agree to revise the date or postpone the creation of charge to some other date so that the company complies with it. But the issue is that in today's context, you will not know, especially in case of a floating charge. In case of a floating charge, there is no real hold on the properties that are subject to charge because they can keep fluctuating. Right. So in that situation, no banker would shift the date. So, and in fact, the onus is on the banker to ensure that the charge is registered. So that is why I say these days, you don't normally see a banker dispersing a loan unless you prove to the banker that the charge is registered. Otherwise, even dispersal doesn't happen. Because they know that once they miss the bus, then they will be at the receiving end before the liquidator in case. Because these days, companies going belly up is very common.
Whether it is mandatory to register with ROC in case of the MOTD is registered and the bank does not want to register with ROC, is this acceptable?
See, mortgage by deposit of title deeds is a mortgage. It's a charge created on the assets of the company. So a mortgage, even though it is registered before the jurisdictional sub-register, because there is a stamp duty requirement, there is a registration requirement under Section 18 of the Registration Act. But the question is whether the charge is registered or not under the Companies Act. It may be registered under the Registration Act before the sub-register. That does not save the banker, right? So it has to be registered under the Companies Act. So unless it is registered under the Companies Act under Chapter 6, there is no question of the charge becoming valid or the charge becoming recognizable before the liquidator. That registration under the Registration Act will not save the banker from arguing that he deserves to stand in the queue of the secured creditors if it is not registered under the Companies.
Correct. You also said in the beginning, if the charge is not registered, he is trying to lose as a secured creditor. He is shifted to the unsecured creditor when it comes to the liquidation. That you said it in the initially actually. Yeah. Consequences of the company if it is failed to get the charge registered within the new timelines.
The consequences, in fact, we have been discussing the same aspect again and again. So, as far as the company is concerned, there is a failure to comply with the provisions of law, and the Professor Balakrishnan will get yet another opportunity to write an article if there is an adjudication proceeding and if the order is passed.
Yeah, consequences will be definitely going to be a violation because you are not complied with the violation of the act.
See, the banker is not going to allow you. I mean, banker is not going to disburse.
Correct. There are n number of cases where the CH1 is not filed. In fact, one of the company I came across, somebody lodged a complaint, the company's affairs are not being conducted properly. He went for the enquiry or something like that. When he was doing the enquiry, he came across the company has borrowed loan from the banks, but they are not, although they create the charges, they are not filed the CH1. Ultimately, the enquiry proved to be nothing, but the CH1 was not filed. Adjudication process started, the company has to pay a hell of a lot of money on that. That is what it happened in one of the cases. Company has created the charge, filed the CH1, but the loan has not been disbursed by the bank. But while liquidation, will this be treated as a secured loan and bank has become secured creditor even if no loan was extended?
The two things. One is, as I said, the liability need not be there for the charge to be created or registered. The moment the charge is created, even for a future loan, the loan to be disbursed in the future, not in the present. Charge has to be registered. This is the position of law. Now, if a charge has been created and if no liability is created, that means no loan is taken, the loan is not disbursed, and the company goes into liquidation. Where is the question of the so-called creditor no filing a claim? There is no claim at all.
Correct.
Unless there is a
claim
loan,
form is
where
to
is
be
the
filed.
claim?
Yeah.
Where is the claim? So
Correct.
the charge doesn't hold good at all.
He cannot enforce anything because he has not given anything, because the claim form is to be put from the liquidation. That is the process.
Exactly.
Yeah.
See, more things. Say, for example, you have borrowed 1 crore of rupees from the banker and you have given a charge on a particular asset. Okay. The asset value has risen to 5 crores. It is charged. That doesn't mean entire 5 crores the bank will take. They will recover to the extent of whatever their outstanding loan is there. Whatever the remaining proceeds are there, they have to pay to the borrower. In case they're invoking that particular, that whatever the property they have registered their name. So by merely registering a charge doesn't mean you are actually losing complete right on that particular property. And similarly, by not merely registering the charge, the banker is also not losing the right of recovery of the loan.
Sundakarji, in fact, I also forgot to mention one aspect with regard to the corporate guarantees. So you'll have corporate guarantees which are given as collateral securities. For example, the holding company would give a guarantee for the subsidiaries borrowing. Now the question would be whether this guarantee has to be registered. So we need to understand that the guarantee is only a promise to pay. The guarantee is a contract. To read 146 of the Indian Contract Act, it's only a promise to pay. So there is no question of any charge getting created, or there is no question of any properties being identified and charge created. So it is not even a floating charge guarantee, right? It is only a promise to pay. But once the principal debtor fails to pay and the guarantor is made to pay, the guarantee is enforced, the guarantor is made to pay, then he stands in the shoes of the principal debtor, the principal creditor, and he has to claim from the company. So there is no question of any operation of charge, or there is no question of any filing of charge in this context. In fact, there is a very oft-quoted case law of ST Patil versus Register of Companies, which is judgment under the Madras High Court, which clearly, in one of the liquidation proceedings, where the corporate guarantee, the guarantor, non-registration of charge, corporate guarantee, was questioned, and the court said that the provisions don't apply to guarantees. So no registration is required.
Suppose instead of a corporate guarantee, suppose say, for example, the subsidiary company has taken a loan In the holding company, instead of a guarantee, they provided a security. That security is by way of a asset. Then the holding company also has to create a charge on that particular asset. And then, in case, God forbids, if there is a non-payment is there, the banker can invoke that charge and can recover that money from that particular asset.
So Sudhakar, I'll just slightly tweak what you said. So if there is a loan given to this subsidiary and the subsidiary has not offered any asset as security, the only asset that is secured is that of the holding company. Let us say.
Yes.
So it is not the subsidiary who would file the particular subcharge, it is the holding company. So we need to understand it is not the receiver of the loan who has to file, unless the properties of that is the borrower is also secure. So it is the
Correct.
security who owns that security, and the charge on that security, that person has to file the particular subcharge under the company.
Correct. Not only that, as far as the financial statements are concerned, then in that financial statements, wherever the loan is being shown by the subsidiary company as if it has borrowed from the banker, in that schedule, they have to show that this borrowing is secured by the security provided by the holding company. As far as the holding company is concerned, it has to give in the notes to accounts about this particular security because it has not taken any money. So it will not come in the main balance sheet as a borrowing or something like that. So in the notes to accounts, they have to provide this thing that they have created a security on that particular asset for the loan borrowed by the subsidiary.
Any time limit for the charge holder to apply for the charge creation? I think
Yes,
this is
time
talked
limits
about.
are there.
Okay. Somebody says
Yeah,
actually here
maximum
ideally
120 days.
before the disbursement. Slide number 16. Why date of registration of the charger does not
No,
appear on the
forget,
charge?
no, 1 minute, Bala, 1 minute. Any time limit for charge holders to apply for charge creation means what? That is within how many days you have to file the charge. Am I correct?
Yeah, that is what I
So
understand.
whether disbursement taken place or not, Madhu has clarified that very well. Whether not a single rupee has disbursed, but you have to file the moment you created a charge, you have to file it within 30 days. And Jaswin has mentioned about the timelines. And once it is beyond 120 days, you cannot even create a charge. So disbursement has nothing to do with the filing of the charge. Yeah.
Somebody is referring a slide number 16. Why the date of registration of the charge does not appear or charge index in MCA? It's very important for ranking purposes as discussed.
We mentioned the date of creation, modification, as well as satisfaction in the charge register that is maintained on MCA.
Yeah, you are right. Actually, even this point, Dr. Madhusudan has very clearly explained how it goes, what is the ranking happens, etc. Those things are. If the charge is created on the property of the promoter director, whether registration is applicable on the property does not belong to the company.
This just now we have discussed that if the subsidiary company borrowed the money and holding company has provided the security, we have already discussed that how it is to be shown, who has to create the charge and how that is to be reflected in the balance sheets of the companies. Same is the answer for this question.
There could be a slight twist to this. See, for example, if the promoter owns a property, and this property is provided through a lease arrangement to the company.
Yeah,
and if the company's leasehold rights are offered as security, then to the extent of leasehold rights, the company has to file the particular subcharge.
Yeah, correct.
So what is secured is only leasehold rights, not the title of the property doesn't get affected.
There may be issues with the lending institution stroke bank about the outstanding dues with the borrowing company may not agree or dispute. Hence, if a NOC is given by the bank, will it be better?
Come back again, sir.
There may be issues with the lending institution or the bank about the outstanding dues with the borrowing company may not agree or dispute. Hence, if a NOC is given by the bank or financial institution, will it be better?
Yeah, see, as long as there is a dispute with regard to certain charges or penalties or whatever it is, those are all contractual in nature. it is up to the company and the lender to solve it, or the company even can drag the lender to a court. And as long as it is settled, then no lender would agree for a satisfaction of charge, right? So there is no question. So even if the company tomorrow, as I said, it is not practically possible, but since there are provisions under the law where the company approaches the ROC and says that no, the loan has been satisfied, there is a process provided. That is why there is a process provided under the law that the ROC is supposed to issue a notice to the lender to check, because in the absence of any consent from the lender, it is up to the ROC to check the lender and to ensure that whether the statement made by the company as regards satisfaction is right, even though practically it is not possible in the e-filing era. So you have the provision under the law. So there is no question of any satisfaction. The lender would not agree for a letter of satisfaction unless he is happy with all the dues being paid, whatever charges or whatnot. If there is a dispute, it is up to the lender and the borrower to settle it.
Sir, now also there is a system accepts CHC1 without the banker DSC affects. In such cases, ROC sends the letters to both the bank and the company. On response to the lapse of the time given, if registered, I have seen this while issuing a search report. Devdas is actually sharing this.
Okay, probably just mean you can clarify whether you would be able to file CHG1 without the what you call signature of the company. I think banker can file it, I think, because there is a provision.
Yes, the banker can file it, right? But the company does require my signature.
I think Pooja is there. Pooja deals with ROC day in, day out. Pooja, are you there?
Yeah.
Why can't you answer this question, Pooja?
Yeah, banker can file the CHG1, and we cannot file the charge without company signature. He has clarified, that person has clarified that instead of company signature, it has to be banker signature. In the later slide, I think that person has clarified.
In most
so we can file the charge. No, we can file the charge with the banker. Banker can file. Because after disbursement, sometimes company is hesitating to create the charge at that time because bankers have already disbursed the loan. So he can file the charge without signature of company director.
So what happens in case of satisfaction? Can the company file without the banker's signature?
So ROC can send the notice. I don't think company can file the
system
satisfaction.
enables you to file the form.
Not without the banker's DSC. In my
not without the
experience,
banker's.
yes, even in case of satisfaction, we need the banker's signature.
So that is why the process that is provided under the law is only in letter.
Right. Correct.
In most cases, the charges are not satisfied on time. As such, the data does not tally in all the balances shown at the end of the financial year in the balance sheet in respect to the loans available. Banks are reluctant to give the NOC. Even sometimes, the ROC does not take on record the charge filed applicable on earlier cases prior to 2008. In such case, what do you advise? So how to get the charge satisfaction recorded with the MCA?
I think for this, Bala, you have to find out a pragmatic solution, which you cannot discuss on webinars.
He has dealt on this in a very detailed manner as to the importance of filing the satisfaction of charges. But under the law, also you have the procedure of the ROC himself, Suomoto, applying this procedure of removing the charges. But that very rarely happens. So if at all, if the company approaches the ROC and says that it is not possible, or it is more than 300 days now for the the banker would not give a letter of satisfaction of charge today because the loan would have got satisfied long ago. And if that is the situation, and if he is able to convince the ROC, still it is possible. The law provides for it, but it all depends.
That's what I said, pragmatic solutions you have to find, not on the webinar.
In one case, the company had to file the Form 17 way back in before 2008. Copies of the receipts are actually available. But the MCA ROC did not register such satisfaction of the charges. It continued to appear on website. Now the company intends to file strike off form. The website of the MCA did not allow filing unless the charge stands satisfied.
Pragmatic solutions again.
The form CHA1 without the signature of the company director not banker, I mentioned wrongly, he's clarified this question earlier now. If a company takes a loan by hypothecating the fixed deposit, he says the charge is to be registered.
He is an asset of the company, no doubt. See, that is the difference. In fact, if you see the current definition under Section 2, subsection 16 of the Companies Act as regards charge is nothing but the borrowal of the definition under Section 100 of the Transfer of Property Act, where the definition of charge is provided. See, only two acts provide the definition on charge. One is the Transfer Property Act 1872. The second is the 2013 Companies Act. Charge is defined only in these two acts. So the Companies Act 2013 Act takes the definition or takes the input on the definition from the 1872 Transfer Property Act section. So you have the lien also covered there, because Transfer Property Act provides for creation of charge by means of a lien. That is why you find it even under the Companies Act.
Does section 82(2) and 83 have any practical significance? Do we really see such action by the ROC in practice?
It is possible, but I mean, practically it is not possible, because we will not be in a position to file the form. CHG4 cannot be filed without the signature of both the company and the lender. So the charge holder. So there is no question of the ROC actually putting into play the process that is provided there. So I was only mentioning that probably you can try section 83, wherein a suo motu power is provided to ROC. That is the only possibility. Otherwise, both the company and the banker has to sign.
Can the register of charges be maintained in the electronic format?
Yeah, register of charges is of two parts. One is the entry with regard to the particulars of charge which you have to maintain. The second is the documents which create charge. So that also should be maintained by the company. So if you can scan all the documents and if you can maintain it, fine. You can maintain it electronically, no problem.
See, the Bala, only thing is that the act, what it provided is you can maintain the board, minutes of the meetings as well as statutory records, either in the physical board or in the electronic board. It is the board which has to decide and pass a resolution to that effect. And after that, you have to consistently maintain that. You cannot say, I will maintain the register of charges in electronic mode and all the others in physical mode. That is not possible if I am not wrong. Number one. Number two, many people think it is a wrong notion. They maintain the statutory registers by computer. Instead of a manual this thing, they maintain it in the computer. And as and when they want, they take the printout and then maintain it. They think that this is electronic mode, which is not so. Electronic mode means there is no question of any printouts. When the ROC, so for example, if it is to be authenticated, that is to be authenticated by way of digital signatures only, whether it is minutes or whether it is registers. So the person who has put the question, he has to understand that when he is mentioning that register of charges he want to maintain in the electronic mode, then all the other registers are also to be maintained in electronic mode. It is possible.
Yeah, as you rightly say, just maintaining the documents in the Word form or Excel format or something like that, that is not electronic maintenance of the format. Even if you actually go through, as you rightly say, minutes, etc., and all the things, along with the DSC, even the timestamp is required to be put actually appropriately to identify the time limit of, you have prepared the minutes and circulated within 15 days, you have entered in the minutes book in 30 days, all such things are there. What happened when the charge is not filed within 60 days? I think this charge we have discussed elaborately. How to get information on charge at what you call CE or SAI?
CERSAI Act is there.
Yeah. I don't think public can access it. It is to be accessed only by the financial institutions, banks. So it is up to even in case of an IBC, say Section 7 application filed by the banker, they have to have a certificate from the CERSAI to be shown as a proof for the debt having been created and having been shown as outstanding. So I don't think there is any possibility of a general public accessing CERSAI. I do not know really. I need to check on this.
need clarification regarding the modifications of charges, amounts for hypothecation and mortgage, which were originally registered for rupees 75 crore each, given that the limit has been enhanced to 65 crores. Banker A has sanctioned an additional rupees 60 crores and 10 crores security, both the current assets and immovable property, and 50 crores only on the current asset. When the banker B is sanctioned the additional rupees 15 security and 5 crore. I think this is a specific case what he is talking about it.
Now, what is the query exact query?
Let me see what is the end of the state query.
Oh.
Can we consider registering the charges with the different amounts with the hypothecation and mortgages, specifically hypothecation for 140 crores, mortgage for 90 crores, nothing if it is permissible?
Yeah, see, the problem is in today's context, the e-form provides only a single, single slot for entering the amount secured by the charge. So suppose you can file multiple e-forms for different facilities for different amounts secured by the charge. So filing a single e-form with varying assets and varying security, the liability being covered under varying security, it's not possible. So suppose if there is a CC limit for 50 lakhs and if it only covers movable assets, you file it separately. And if there is a movable property secured for certain term loans for a different amount, then you have to file it separately, because you will not be in a position to show both these in a single form, because the amount secured by the charge is something which is a very common, ubiquitous term, I would say, because it doesn't say what is the nature of the charge. It only simply says the amount secured by the charge. But within the CHG1, you can probably provide a breakup of different loans or different facilities provided by the banker, and what is the nature of security offered for each facility. That is possible. Or you can even file it separately also if you want. You can file the term loan separately because the nature of the security may be different. Working capital separately. It's all left to the company, whichever way they want to file it. But the thing is, the banker would verify that whether the total amount that is granted and what is the nature of security subject to which the loans are granted. And unless all these are brought and registered accordingly, then it is very difficult for you to get a disbursement. And definitely these days, it is a norm that unless the charge is registered to the satisfaction of the banker, that is more important, because the bankers, they just don't sign the form on the dotted lines. They actually go through, see whether the sanction terms vis-a-vis the documents that is executed, everything is complied and the particulars are properly written. In fact, they become over ambitious to even to write those particulars of charge which is yet to be created also. So this also happens, but they ensure that unless it is registered, there is no question of disbursement.
Well, I got to have now rapid fire question round.
Yeah,
because
how does
it's already
accounting treatment
20
affect
minutes,
charges?
we've
Why should the
overshot.
lender be bothered about the value as per the index? It is nothing to do with the lender. It is for the company's presentation when it comes to the accounting standard, because they have to follow the procedure. We can file the charge after 60 days by paying ad valorem fees within the time. Further 60 days, beyond 120 days, there is no option to create the fresh charge. That is right, that you explained actually. Beyond 120 days, we can file via CHE 8. No, when the original form itself is not filed, how can you file CHE 8? CHE 8 is actually, as I explained, is only a rectification. Penalties and fines are compensatory nature and are allowed expenditure of the income tax. That we discussed actually. Nowadays, NCLT insists certify report before admitting the company in CARP. Is there any other site where one can get the charges about the company?
Yeah, the MCA portal. The MCA portal provides you the register of charges.
Bankers file, but they send the draft to check it and apply to the DSC. Is there any concept of condonation of the delay here? No, you explained actually. There is no, if the time is lost, you cannot file it. There is no question of condonation, etc. That is done away with this. A limited of the lender to B limited. A limited wants to reach the charge of the company C limited as per the tri-party agreement. Is this possible? That also you explained actually. Whosoever the owner, it can be registered. You gave the example of the holding company and subsidiary company. If the borrower is under IBC NCLT of the company is no more, the charge created is fully satisfied, but satisfaction is not filed with these days. But now, not possible to file because no person from lender is signing. How can it be resolved?
There is no question of any claim. The charge may be alive. Unless there is a claim, where is the question of anybody even launching a claim against the company? No problem. The charge would have expired.
For credit card, we may not be proving as a lien or asset charges. Will it be required?
No. See, the question is when you take a corporate credit card also. Suppose if no lien is marked on the fixed deposit or anything, it is an unsecured credit only, granted by the issuer of the card. That's it. Unless there is a security on which the charge is created and the security belongs to the company, there is no question of trigger of Chapter 6. No requirement of fine.
When condonation is not allowed beyond 120 sales, why is CH done is applicable?
It's only for satisfaction.
I think that is all the
Condonation is allowed only for satisfaction, not for creation or modification.
I think that is all I have the queries here. Any hand is reason for asking the questions? I don't see on the face of it. Anybody would like to ask questions, please? Yeah, I can see one hand. 1, 2, 3. Yeah. You can unmute your mic and you can speak. Anand Kumar, any one of you. Aravind?
Sir, Anand Kumar here.
Yeah.
Sir, for every renewal of a bank loan, should a fresh charge be created?
See, as I been repeatedly saying, the question of the requirement of filing CH1 arises only with the creation of charge. So, unless if your earlier charge what you have filed secures say X amount, and if the renewal is either equivalent to or less than the X amount, and there is no modification to the charge that is already been created, there is no question of filing. See, the extent or operation of charge in respect of which you are supposed to file a modification applies to two aspects, as I said. One is on the liability, that is the amount secured by the charge. The second is the extent of the charge, that is, if there is any plus or minus with regard to the security, or it is with regard to any liability. Otherwise, there is no question of filing again. Renewal normally would not require filing of modification unless the extent or operation of charge gets affected.
Any change in the rate of interest, does it require? Thank you very much.
If the terms and conditional volume changes, then only you need a modification. Yes, Arvind, you can speak.
At the time of, one should also understand if there is a default and there are clauses in the agreement where there are imposition of, it talks about imposition of penal charges or costs or whatnot. We need not account that when the going is good. So these are all terms as part of the contract of the lending and borrowing. So those things without an incident happening as regards the default or a non-payment does not really add up or does not amount to amending the extent or operation of charge. Suppose if your question is, see, my limit was about 50 lakhs, I have used the entire limit. Now I have exceeded the limit also. I have overdrawn my CC facility. So I reached 55 lakhs. Now, whether this would get covered because my original CH1 would only talk about 50 lakhs. So all these aspects are subject to the terms and conditions. So there could be a situation where I would have only created charge for 50 lakhs. But this 50 lakhs is not a very, it's not a concrete figure. The 50 lakhs is subject to other terms and conditions as part of the documentation. So tomorrow, if because of addition of costs, if the liability secured by the charge loads up, the banker can as well claim for that because it is all part of the terms and conditions. Yeah.
Arvind, you can talk. Two more hands are there. One is Arvind, one is
Hello.
Surendra.
One small question, sir.
Yes.
Actually, the company Nagarjuna Finance has given a loan to ABC Limited. Now the Nagarjuna Finance is no more, but the charge is lying in the ABC Private Limited. How can it be removed in ABC?
So what happened to the loan? They would have assigned it to somebody. Nagarjuna Finance would have assigned this loan to somebody.
Agree, but the Nagarjuna Finance, it is not under NCLT or no liquidator is appointed.
No, unless no, there is a the lender is alive. The lender has not assigned it to anybody. The meantime, the lender itself gets wound up, and you can't do anything. As far as your entry in the MCA is concerned, there is no one who can issue a satisfaction certificate. So you would not be able to file. In fact, you would only probably put into play the provisions which is that just the I think 88 or 89, which provides for the ROC suo motu power for the ROC to cancel this the charge. That is possible, but you have to prove that the lender itself is not available to.
Yes, Vijay.
Oh. Okay, thank you, sir.
Vijay or Madan?
Vijay is over just now.
It's my Vijay only, sir. Thank you.
Okay, yeah, okay. I think that's all we can close. I think we are already closer to 1:30.
Yeah.
I must sincerely express my sincere thanks to Dr. Madhusudan for your excellent deliberation. There are a lot of practical insights you have given actually. In fact, this topic, although everybody thinks it's very simple topic, etc., nothing, it has got so much intricacies, etc. The way the people have been putting the puts in, the way they are interacting it, we can definitely make it. The company secretaries to get equipped, to get better educated, better equipped to meet the challenges. That's what I would say. Sudhagar, no doubt, I will not have any words to say anything because he has an advantage of being a chartered accountant as well as the company secretary. Both the things he keeps adding value. Hats up to you, sir. The sessions was very enlightening, very good. And Jasween, excellently, she has brought out everything very precisely, covering up everything, putting it very nicely, very lucid way of explaining the things. Very nice. Thanks a lot to everybody. With this, we...
I think Bala, we have to give some credit to Disha also because Disha and Jasween have collaborated this particular presentation. So let us give some credit to Disha also.
No, not some credit, full credit. She is always behind the curtain, Yeah. She is always behind the curtain for all the webinars. Sudhagar sir, we cannot forget. That is there. Thanks a lot to everybody.
Yes. Thank you very much, everyone.
Thank you, Sudhagar. Thanks for inviting me.
With this, we close the session.
Thank you, Dr. Madhu. Thank you very much for obliging us. And I'm sure in future also you will be giving us this kind of an opportunities as and when we require you.
Yeah, pleasure is mine. Thank you for the opportunity.
Doctor, give my regards to Ravichandran.
Yes.
Thanks a lot. Thank you.
Yes, sir.
Have a good weekend.
Yeah, good weekend also.